Everyone's doing good. Welcome back to another lesson. So today's lesson marks the start of a new mini series how we have with all the bias things. So this series will probably get stretched out for a few episodes as I add new things. But what we're doing now, right? So in these past few episodes, I've taught you guys, let's say, all the tools and stuff. I've given you separate things. I haven't really taught you how to bring them together. Intraday trading, is where we're going to be bringing all of these things together, and I'll be showing you how to actually use them in real time. And if you're on these episodes right now listening, this is where stuff should really start to make sense. And when I talk about things on a day-to-day basis, when I say, oh, look at London at this time, blah blah blah, now we'll get into the details, of course, but essentially everything will make a lot more sense with this episode and the next couple that are coming up. So yeah, strap in. So let's start, right? Some of the basics, right? Time and sessions. These four things that I've written out are very relevant to us. There is more as well, but for now, that's what we're concentrating on, right? New York midnight price. I've mentioned this before. Very important. The Asia session, the London session, and New York session. Before I hop on the charts, right? Let's talk about bias for a second. What is bias? Bias is knowing the direction that price is headed in, what price is drawing to, liquidity imbalances, volume imbalances, right? Cool. If you know your direction, it's fairly easy to get in line, right? We know what we can use to get in line. We can use order blocks, we can use fair value gaps, essentially we'll just be executing and trying to get in line with the higher time frame. What these four things do for us, right, is offer data. Price does specific things in these sessions. New York midnight holds a significance. If we can come and collect this data, right, we can form a bias with very high probability. I don't wake up for London most days, right? I'm on charts around 9 a.m. But when I'm up at 9 a.m., when I get on the charts, the first three things I will look at, I'll start with my New York midnight, I'll see what Asia has done, and I'll see what London has done. And of course, I'll also usually do my ADR. And then I will anticipate what New York will do. The more data you have, the easier it can be to predict what's coming next. Not always, but typically that is how most days will go for you once you guys have learned everything I have to teach. But let's hop on the charts. Let's see what I actually mean. Okay, so I'm pretty sure I've shown this indicator before. FX market sessions by, I don't know if you'll say, I think it's by somebody called Boitoki. That's Boitoki. I'll probably paste it in chat in case that's wrong. But cool, so this indicator, what it does is show me our three sessions. So this is today's price action, right? And what I want you guys to know is each session, the box, right, it looks different. Something different was done. We can all agree on that, right? Now, I know some of you come from other premiums. Some of you already might know this stuff. But for those of you that don't, Asia, this Tokyo session, what we typically expect is a range. And you guys can see this is a very good example. We have this sideways movement during Asia. And in London, especially at the start of London, what we expect is something called a Judas swing. What is a Judas swing? A move against our bias. Here's another thing, right? If you're listening, and you already knew about Judas swings, this is what a lot of people probably don't know. Judas swing doesn't only occur intraday, it can occur on any time frame. When we have those manipulative swings away against bias, your PL3s, right? It's just the same thing. Price is fractal, it just does it over and over again, different time frames. But back on topic. Consolidation. We have this Judas swing, and then we have this expansion. Let's call it the real move of the day, because what was today? Bearish day, right? If we go look at the daily candle, bearish daily candle, right? And of course, I know it hasn't closed yet, but I'm fairly confident it's going to be a bearish day. So cool. Now, if I get rid of that for a second, here's something interesting, right? And now, what does that look like? Of course, I know some of you may not know what this pattern is. Accumulation, manipulation, and distribution. So today, for me personally, it was a very easy day to read in terms of bias. Now, just because the bias is easy to read doesn't mean it's easy to find entries. There's a difference, and we will talk about that in later episodes. I'll get deeper into finding entries intraday in its own episode because there's a lot of factors to it, right? I just want to talk about the framework of each day. So this is what I would call, a typical bearish day. If you told me, oh, what is a bearish daily candle likely to look like? I'll tell you, Asia's going to range, London's going to do this upwards, and then we're going to distribute. We're going to have expansion downwards, right? And as you guys can see, this will happen. You bring this back because it's a little bit nicer than the box that I drew. But AMD, again, is a model, or rather a concept, that you'll see on all time frames with this fractal. Cool. What else did I speak about? I said New York midnight price, right? So if we come on our chart, we find the midnight candle. It is this candle. This was New York midnight price. So we will dive deeper into how we can use New York midnight price to find and assist setups, right? But I want you guys to go test this because I'll bring that into one of the next lessons. Most likely the next upcoming lesson that I have planned. And I want you guys, right, to first get this session indicator. Yep. Then I want you to go and find New York midnight price. Bear in mind, my chart is in New York time. And I want you to see what price does. What price does here. The pattern you should see quite often. So we have this run above New York midnight price, right? And it's important that it's above because today is a bearish day. This is something called protraction, right? The Judah swing. And not just New York midnight price, just the Judah swing by itself, we can call it protraction, right? Or rather what I've taught you guys earlier, contraction. Because on the daily candle, what's all of this going to be here? It's going to be a wick, right? And the expansion, the body of the candle is, somewhere here. And of course, the bottom wick is somewhere around here because this is where we made the low. Cool. This protraction occurs above New York midnight price. We get a market structure shift that goes through New York midnight price, and then we have the expansive move downwards. So what exactly do I want you to backtest? I want you to, like I said, get your session indicator, get your New York midnight price drawn on, and I want you to see what price does around it. And I want you to then, check your daily chart, say, is this a bullish or a bearish candle? Of course, you'll see. And I want you to see what it does on those specific days. What pattern do you start to see on bearish days? What pattern do you start to see on bullish days, right? So that's the first step, and that's going to matter. And we're probably going to we'll probably touch on that this weekend because that's when I plan to do a Zoom, which will be before next Tuesday's lesson anyway. So, if you're watching this and you're up to date, try and have that done before the weekend, please. But back to the presentation. Okay, so I'm sure some of you have heard of the kill zones. So what are the kill zones? Let's start with literally the timings, right? I've written here. The London kill zone is 7 to 10 a.m. and the New York kill zone is 12 to 3 p.m. These are the times that I will be trading. I don't trade outside of these hours, right? As I said to you guys, remember I said to you, right? When I jump on my charts at 9 a.m., I hop on, I analyze Asia, I look at what London's done, and then I anticipate what New York will do. I don't start trading in that London lunch. London lunch is 10 to 12. I don't trade London lunch. I anticipate what New York will do and wait. Just sit on my hands. So what are the actual kill zones, right? So first of all, let's talk about sessions. I know I've explained this before, but briefly, right? When we look at the sessions, why is London session from 8 to 4? That's what our typical jobs are like, right? Our like 9 to 5s. That's when all the institutes are busy, when all the traders are in the market. Yeah? So I want you to logically think now. I want you to start seeing the pattern. New York, right? If you take the timings, New York session, right, starts at 1 p.m. 1 p.m. for us is there 8 a.m., I believe, or 9 a.m., one or the other. Can't remember. I'm pretty sure it's 9 a.m. And now you guys should realize, right? And the same with Asia, by the way. You guys should realize, what are these sessions representing? They're essentially representing the 9 to 5 for that area of the world, right? That area of the globe. Why are we doing that? When we trade these forex pairs, right? When we trade the euro, we trade GBP, and we trade these USD pairs, right? When do we want to be trading them? When those countries that hold all of that currency are where you can trade them, right? It would only make sense. Otherwise, the coin's going to be dead. Go look at EU, I don't know, at that midnight UK time. It's going to offer you no movement. It's going to have high spread slippage. It's not favorable trading conditions, right? Good trading conditions are when we have these injections of liquidity. These injections of liquidity happen when we're in our sessions, in our London and New York sessions. Here's another thing you guys could backtest if you wanted to. You can test, right? And if you go look at the start, or sorry, the open of New York, you will usually see some sort of explosive move. Even if it's not explosive necessarily, you'll see a strong move in one direction before we either see a reversal or we see continuation. That's usually the two things that New York will do. Of course, it can also consolidate, and we'll come to that in a later lesson, but typically we'll get reversal or continuation. And that's a pretty easy backtest. All you have to do is literally turn that session indicator on, see when New York starts, and literally see every time. Go on, for example, your 5 minute, you'll see the candles have a strong move in some sort of direction, right? So the last point, it comes back to that thing I said about who's holding this currency, who's trading it, right, in large quantities. It's what we call smart money. I know you guys have heard of smart money, most of you probably, right? Probably heard of smart money concepts and all of that stuff. But who actually is, smart money when we talk about it? When we talk about it from, let's say, ICT's viewpoint, because it's his concepts that we're trading. Smart money, I want you guys to understand as the breadwinners of the market. They're the guys who are actually, let's say, in a way, in charge. I'm not saying they're controlling price, but it's the people that we're trying to trade like. They're profiting. Most people don't profit in this market, but they're profiting. That's why we want to trade like them. They're the people, partaking in this aisle fed. I taught you guys aisle fed in the last lesson, I believe it is. There's a reason we're trading at these specific times. I know a lot of people probably aren't used to this, especially if you're new. You're probably not used to, or you're probably more used to just jump on charts, start trading anytime. I understand. I used to do that as well. The more I teach you guys, the more concepts we bring in, the more I show you, the clearer it will get why we trade at these specific times. And I hate to be cryptic and saying, oh yeah, we'll learn this, but we actually will. And if I can, with these lessons, especially the intraday teaching, I will try and speed it up a little bit and try to push out lessons more than just once a week. because I really want you guys to learn. I feel like most people who make it to this lesson so far, it should be very easy to start picking up the next things, especially if you've come to me on the previous things, asked me questions, and truly understand them. So, if you don't understand anything, please come to me. Please drop it in chat. You need to understand every single lesson. They're in a specific order for a reason. So, that is why we trade the Killzones. That's a little bit of a breakdown and a little bit of a, I guess you could say, outlook into our intraday, again, zooming into our daily candle and seeing what we do. So now I want you guys to see, right? A lot of people say, oh, are you going to be up for London tomorrow, up for New York tomorrow? So if this was new to you, this is why. So I want you guys to pay attention, especially for the new guys. I want you to see when people are trading. Because after a certain point, so for me, 3 p.m., I don't trade. The timings are a little bit different for indices if you trade them, SP 500, US 30, NAS 100. But for our Forex pairs, I don't trade them after 3 p.m. That's about it for today's lesson. It's not a massive lesson, and I hope that's not complicated. And due to this being a bit of, I guess, simpler lesson, I will try to push out another video later this week. And we will have that Zoom on the weekend. I've set you guys some homework in the bootcamp channel, so everyone check that out. Everyone try and do that. If you have any issues, just please message me, and I will be setting more homework in there, more tasks to do. You guys can either forward me the results or drop it in chat. Sometimes I say don't drop it in chat, so please just read and make sure you're doing the right thing. But that's it for today. It's all my socials if you guys want to follow me, and I'll see you guys in the next lesson.